Cathie Wood from ARK Invest recently did an interview where she predicted these prices for Bitcoin.
Base and bull case. So our bull case is 1.5 million. The base case is 600, I think it's 625,000, something like that. Now, one reason we've actually internally, our confidence has increased towards the bull case is because of what happened during the regional bank crisis in March. What happened? Bitcoin, so as regional banks are going bankrupt and the stocks are imploding across the board for the KRE, Bitcoin rallied from 19,000 to 30,000. Why did that happen? That was a flight to safety. That is the insurance policy that we are talking about, that we believe everyone will want at the end of the day. Insurance policy against two things: confiscation of wealth, either directly or by inflation, or in the deflation world, what is it a hedge against? Right. It's a hedge against counterparty risk. We won't have an 0809 with Bitcoin. Everything is decentralized and transparent. No obfuscation.
Now in this video, Mark Yusko explains why he agrees with Cathie, and his explanation will blow your mind. So check this out.
The math of Bitcoin is pretty easy, right? We take the total market cap that we think is achievable. We divide by the number of coins that are still in circulation, and you get a number. And everybody fixates on that number. But I always think it's the wrong number, right? Because it's in our currency. So you and I both know one Bitcoin is one Bitcoin. It has been the entire time. That's what we're trying to move toward, is a world where Bitcoin is the unit of measure. What we're talking about here is dollars per Bitcoin. And that price that everybody fixates on isn't so much Bitcoin getting better. It's actually our money, right, the dollar, getting worse. It's, like trying to buy a cup of coffee that, used to be a quarter, now is $5 or $6. It's the same cup of coffee. It does the same thing. It delivers the same amount of caffeine, unless you put whatever Cathie's putting in hers. So anyway, the math of just pick a number, 500K, 600K. Let's do that math together. Where does that even come from? Well, if you have a base case that the market cap of Bitcoin should roughly equal gold's market cap. Okay, yeah. A reasonable assumption. If we say that Bitcoin is digital gold and it plays the role of base money, right? Money, as we know it, is really a small thing. It's gold. And Mark, what do you mean? I use cash. No, that's debt. That's a currency, but it's not money. Money is an asset that exists in the absence of a liability. The only thing in the world that does that for 5,000 years is gold. Now people have dabbled with other stuff, but ultimately all of the other stuff that we think of as money is backed by debt. It's currency. And that's why it ultimately devalues and ultimately inflates away, and why in the history of the world there have been 775 paper currencies. 3/4 of them no longer exist. I mean, they literally went away. And the same is happening in real time to the dollar, which is why Larry Fink, like not exactly, Joe from some, Twitter handle. We're talking one of the most powerful people in the world, manages, he's in charge of a company that manages close to 10 trillion, with a T, dollars, said that you should put some money in Bitcoin, in my ETF, of course, that will protect you from devaluation of the currency. Let's round gold to 12, because it probably is, and your 20x is right.
20x.
But here's the thing: half of that gold isn't money; it's jewelry and chalices and gold leaf and stuff that isn't really used as a monetary base. So that half is 6 trillion. That's a 10x from here. Current price of 30, 10x is 300K. Okay.
I get
300K to me is so easy. We don't even have to debate, because the idea of Bitcoin being better than gold as a store of value, as a unit of account, as more portable, like I say all the time, if I had a bar of gold, which maybe at my other house I do, but if I had a bar of gold and I wanted to break it in half and send you half, I'm not strong enough to break the bar of gold, first of all. Second, I couldn't stuff it in the computer to send to you. I want to send you some Bitcoin. I punch a couple buttons and you got Bitcoin.
We're done.
So that's a superior store of value and medium of exchange. So I believe Bitcoin gold equivalence is a no-brainer. Now, when? Tomorrow? Next day? I don't really care. Sometime in the future. I actually agree with what she's saying, in the sense that we have, for 800 years-ish, been ruled by this system. And I used to tell the story, Scott. It's funny. I just got back from a vacation. I took a long vacation for the first time in a long time, and it was awesome. We went to Spain and Portugal. And for years, I had talked about, and I think even with you on the show, I've talked about, the Medicis, 800 plus years ago, invented fractional reserve banking. And they borrowed, aka stole, as Picasso said, good artists borrow, great artists steal. They stole from some monks this idea. Now, I didn't know until a couple weeks ago, when I was in Portugal, that those monks were the Knights Templar. That these Portuguese monks, the Order of Christ, the Knights Templar, the cross, that, here's the crazy thing, Scott. Once you hear this story, everywhere you look, every monument, every little sidewalk, little inscription, every Portuguese flag, everything, like every football coat of arms, like Barcelona's coat of arms has the Order of Christ right there. So Knights Templar everywhere. But this fractional reserve banking system, it's not the devil that everybody thinks it is. It's just fragile, and it's subject to abuse. And I've used the example all the time. In the old days, I lent you money. I wrote down in my ledger. I kept the ledger because I was the rich guy. You needed the money. And I wrote down, you owe me $100. You come back to pay me $100. I've tampered with my ledger. You show up with your 110 to pay me back. And I'm like, oh, but Scott, it says right here, you owe me 200. And you had no recourse because there was no other ledger. So the Medicis, borrowing the Knights Templar, said, okay, Scott, you keep a ledger, Mark, you keep a ledger, and we, the benevolent Medicis, for a small fee, will arbitrate that the ledgers match. But here's the thing, they're corruptible, and I'm a corrupt guy. So I go to the Medicis, and I say, you know what? Scott owes me 100, but I'm gonna change it to 200, and I'll give you half. And they're like, done. So you come back to pay me 100, and the book says 200, and you're like, hey guys, it's 100. And they're like, Scott, you must have written it down wrong. I'm sorry. And so you have to pay 200. And so for years, the system has been corrupted. And we've seen lots of examples, from the spoofing and the fines. My favorite stat on that is the fines paid by the global banks. The fines, not the malfeasance, not the money laundering, not the fines that they've admitted to and paid equals the market cap of Bitcoin.
Yeah.
I mean, that's an amazing stat. And that's a little outdated because I think it's only 500 billion and now we're up to 700 billion. But still, $500 billion is a lot of money to pay for malfeasance. And so now we have this triple entry accounting system, and that Cathie discusses, this decentralized system where we don't have to rely on the Medicis or the Morgans or the Rothschilds or anybody else. It's just you and me and this global decentralized network that is immutable and permanent, that we don't have to debate. And we don't need anybody else. Like, if I want to send you money right now, you have to have a bank account, I have to have a bank account. We pay a fee, wire transfer fee or whatever. But that's antiquated technology.
We all know the halving is happening in 2024, so what will happen to Bitcoin prices until then?
The point was, there's a 4-year cycle, and there's going to be a 4-year cycle because it's coded into Bitcoin. Every 4 years, the block rewards get cut in half. And therefore, one of two things has to happen. Either a large number of the miners have to go bankrupt because their costs are basically fixed, or the price has to rise. And that's a pretty cool thing, because what happens is as the price rises, it attracts attention, right? Movement attracts attention, right? And like if someone, like if my son or daughter were to, move across the frame in the back, I would look, because that's what, we hunters do, and we follow movement. And so what happens every 4 years is we have these seasons. And today we're in crypto summer. Well, what is crypto summer? Summer is the period leading up to the halving, the year before the halving. And what does that mean? Well, that means we drift from below fair value. Okay. Now, why are we below fair value? Well, because we had winter 2 seasons ago that pushes the price down. Well, why does winter happen? Well, because people freak out because of the parabolic top in the previous fall. And then we go through spring, which is kind of the bottoming process. That ended, I think, from June to June. And now we're back in summer. Well, if the Metcalfe's Law model that Tim Peterson, that I use, says fair value is 55K, investors, people who buy things below fair value, that's what an investor's supposed to do, would be accumulating Bitcoin here, right? If the price is 30 and the fair value is 55, you would be a buyer. So as that happens, it slowly accretes toward fair value. When the halving occurs, suddenly the price has to rise a little faster. Well, now that draws in speculators. Well, what are speculators? Speculators are people that don't care about the fair value. They don't care about the price. They just want to make money. So they're drawn to the movement. Well, so in the fall of the cycle, okay, the year following the halving, what you get is increasing velocity and increasing interest. The media comes in, you got lots of clickbait, and suddenly it starts to go parabolic. Well, here's what happens. Toward the end of that cycle, that fall period, you get the leverage. And the leverage is what causes the parabola. And that's true of everything. Look what's happening in stocks right now. Why are stocks going like this? Why is Nvidia going like this? Leverage and short selling and short covering. That's what it is. When we hit 60, the model said fair value was 20. It had been up to 30 and it had fallen to 20. Because remember, transaction volume fell and everybody was afraid.
Yeah.
And so we got to 3x because of the crazy Binance 100 times leverage and all the stupid stuff. And that's fine. In the previous cycle in 2017, we got to 2 times fair value was 10. We got to 20. Okay, that's fine. So this time, fair value will accrete, according to the model, if things stay the way they are, fair value will accrete to around 100K by the halving.
Also, everyone is talking about the Bitcoin spot ETFs. Mark says this one will be approved.
The BlackRock ETF is approved. The BlackRock ETF will be approved. There is no question in my mind that will be approved. There is but the other ones are ahead of them. I don't care. They will not be approved. The BlackRock will be approved. After that, maybe someone else will get approved, just so they can kind of cover their tracks. But BlackRock's going to get approved. So that's going to cause increasing demand. There is a finite supply. So there's the first finite supply, meaning there's only going to ever be 21 million, and there won't even be 21 million because there's been some that's lost or stolen. You got the Satoshi wallet that's never going to move. You got all kinds of stuff. So that, and the incremental change in Bitcoins, by some estimates, is about 10, 11% of the coins. If hundreds of billions, which I think is a reasonable estimate, comes into the market, okay, and we're talking, let's say 200 billion comes in, and there's only 60 billion of available supply for sale, price will rise. That's just supply and demand, right? You shift the demand curve, the price will rise. That will cause more people to come in. That will cause some leverage, but I think this time the leverage won't be as great because the scrutiny of the regulators.
That's all for now. Please leave a like and your thoughts below, but you may also want to watch this video next, where Gareth says what the following targets are for Bitcoin according to the charts.